The fallout continues for cryptocurrency exchange FTX. In an updated bankruptcy filing, the company now reveals it may have more than 1 million creditors, hinting at the huge financial impact of its collapse on crypto traders. Last week, the company filed for Chapter 11 bankruptcy. At the time, it only indicated that it had more than 100,000 creditors with claims in the case. Treasury Secretary Janet Yellen is weighing in on the collapse of the crypto exchange empire. Here's what she said.
Well, I think this is a space where investors and consumers should really be very careful. We have very strong investor and consumer protection laws for most of our financial markets, but in some ways, the crypto space has inadequate regulation.
So I want to bring in Samson Enzer. He is the co-founder of Cahill, Gordon and Raindale. Good to have you, sir.
Good morning. Thanks for having me on.
So let me ask you about regulations. As you know, throughout the history of this country, when there are esoteric securities or esoteric investments that are made available to the public, at some point, the government takes a look and says, you know, people are being hurt, or people have the potential to be hurt by making investments in these fairly risky securities. These cryptocurrency exchanges haven't faced the kind of regulations that other types of securities or investments face. Should they, and what would that look like?
Great question. So I think I'm going to disagree with the premise just a little bit. I think there are a variety of existing regulatory regimes, including the 1933 Securities Act, the 1934 Securities Exchange Act, the Commodity Exchange Act, banking laws. There's a variety, and money transmission and bank secrecy requirements that impose anti-money laundering requirements. These are all on the books already, and a variety of regulators in the United States have actually been enforcing them in the cryptocurrency space. I don't think we're in a situation where there's a lack of regulation. I think what there is a lack of regulatory clarity about who is responsible for policing the crypto market, who has primary authority, and what the rules of the road are. And in fact, many in the industry have actually been asking for clearer rules. Coinbase, for example, petitioned the SEC, the Securities Exchange Commission, to engage in rulemaking to make the rules clearer. Others in the industry have asked Congress to pass legislation to make clear that there should be one oversight body responsible for overseeing the crypto market. And unfortunately, legislation has not been passed yet to really put the regulation of this market under one house.
So, then you got to wonder, is it because there's a lack of will, or maybe people don't quite understand cryptocurrency? We're learning now with the collapse of FTX that, there was an awful lot of money donated to politicians. There are reports that the lobbyists representing the company no longer work for them, but it lets you know they had enough money and enough foresight to have lobbyists in Washington, D.C. to work on their behalf. What is the likelihood that we will see any sort of regulation or, at least some governing body appointed to regulate cryptocurrency if there's, also a tremendous amount of influence with the money that cryptocurrency can make influence in Washington?
It's a great question. And I think, to be clear, from the press reports I have seen, I believe what you're referring to is that FTX, the exchange that is now bankrupt, had donated tens of millions of dollars to the Democratic Party, to Democrats. Now, in terms of will we see legislation, there were two major bills, including one proposed by Senator Loomis and Senator Gillibrand from New York that had been pending. I think the odds of them passing have gone down, not up, both because of what's generally happening in politics in America with a divided Congress. Just that generally influences it. And I think that the situation with FTX will make everyone want to take a fresh look at it, but it's going to be hard. There's so many complicated issues to unravel now that it's going to require everyone to take a new, fresh look at what does this bill do? What do we have to address in it? There's a host of issues that I think have now been brought to light by the situation we have with FTX, Celsius Network, Voyager, Three Arrows, that may require just a fresh start on legislation.
Can I hone in a little bit on the point that you made about millions of dollars that were funneled to members of the Democratic Party?
Not funneled. I mean, these are above the board donations.
Yeah.
Funneled makes it sound,
Yeah, right.
you know?
Yeah.
It's like they're
donating.
Yeah.
But should, I mean, I guess the question should be, should these politicians who are receiving these monies be aware of the underlying assets and where they're coming from? I mean, if it turns out that this exchange, FTX, was sort of a house of cards, what kind of, I mean, who's regulating the politicians who are accepting this money, I guess is the question, right? I mean, you've got, millions of dollars going into the coffers of the party, and they're using that money to win elections. And yet no one's asking any questions. That seems really strange to me.
I mean, it's an important question, and that is, there is an entire, regime set up for that. You have the Federal Election Commission. You have rules that govern donations. Separate and apart from that, you have a regime of money laundering laws and anti-money laundering controls that are in place, all of which are in play. I don't really think that this is an issue unique to cryptocurrency. I think that this is an issue unique to any situation where you have folks donating who may not be above board, and maybe donating to gain influence in Congress to garner and curry support. This is an issue that affects a variety of industries. It's an issue, frankly, as old as time, as old as our republic.
So just really quickly before we let you go, we've been talking about these politicians losing some of their funding and these sort of uber rich investors and stuff. But what about the regular person that may have invested? Do they have any recourse at all? Is their money lost?
So it's a good question, and it depends on what you mean by invested. If you're talking about somebody who deposited funds into FTX, so they put money onto FTX, and FTX perhaps took their funds and lost it on risky bets with Alameda, or lost it in a hack, they will be able to make a claim in the Chapter 11 bankruptcy process. They're likely an unsecured creditor, which means that anyone who's a secured creditor gets the first priority in getting paid, and then whatever's left will be distributed pro rata among those who are unsecured creditors. If they are somebody who invested stock, so they bought equity in FTX through a private capital raise, then they would have a different set of rights and a different type of claim. So it really depends on the nature of their business relationship with FTX, how the funds were parted, whether they had a priority security interest, et cetera.
Okay, Sam, very interesting. Thanks.
Thank you.
Thank you.